When you hear the phrase due diligence, it can sound intimidating, like you need to be a forensic accountant or a lawyer. But here's the reality. Due diligence just means doing your homework before you commit your money. It's the evaluation you do to educate yourself, uncover risks, and arrive at an informed decision. There are two sides to due diligence. Hard due diligence is facts and data, legal documents, regulatory filings, revenues, track records. It's the objective, measurable stuff. I think of tax impact as a part of hard due diligence. Soft due diligence is everything around cultures, values, alignment, things like a manager's transparency, their responsiveness, and whether they genuinely assess the fund's fit for your risk profile. It's putting everything in context. These are the elements you learn from how they engage with you. The depth of your diligence should be proportional to the risk you're taking. The depth of your diligence should be proportional to the risk you're taking. If you're considering wiring €500,000 overseas into a private golden visa fund with limited transparency, you owe it to yourself to dig deeper. One of the most common mistakes investors of any kind make is relying on the halo effect. That's, I like this idea, I like this person, I like the benefit this unlocks, without digging more deeply into the risks and fine print, not checking regulatory filings, and ignoring deal terms. It's easy to be charmed by a polished brochure and the promise of a sunny future. That's not a substitute for due diligence, and relying on a salesperson to uncover risks for you is a trap I'd like for you to avoid. To help you with this, I want to give you something practical, the 5 pillars framework. If one of these pillars is weak, the entire investment rests on shaky ground. If several are weak, the structure could collapse. Here are the 5 pillars for evaluating a golden visa fund. Pillar 1, manager integrity. This pillar asks, who are the people behind the fund? Are they properly licensed and regulated? Do they have a track record of not only raising capital, but also of returning capital to the investors? Or is this their first time offering a fund? And are you comfortable with that? Pillar 2, fund strategy. This pillar asks, what is the fund actually doing with your money? Is there a genuine business model with independent merit? Or is it a thin wrapper around a visa program? Also be aware of herd behavior and sector concentration that can lead to bubbles in a small economy. Pillar 3, legal compliance. This is one that many investors ignore, and it can absolutely ruin your golden visa journey. This pillar asks, is the fund in compliance with U.S. securities laws? The U.S. SEC has broad powers, and non-compliance, even by an offshore fund, can put the fund and therefore your investment at risk. Pillar 4, economic rationale. This pillar asks, would this fund exist without the Golden Visa program? A durable fund should have a genuine thesis and assets with intrinsic value that make sense on their own merits. Pillar 5, investor alignment. This pillar asks, are the interests of the fund sponsor aligned with your own? Look at the fee structure, especially hidden commissions paid to third parties, and check the redemption terms to see whether you truly have a path to get your capital back. To help you get started, I've put together a free downloadable checklist of the 5 pillars and some of the key questions to ask. You can get it by clicking the link in the description. When you put these pillars together, you can form a complete lens for evaluating any Golden Visa fund. By using this framework, you can expose weaknesses early before you wire your money overseas. For a full education on how to apply this framework, including tools like a fund comparison grid and a sector concentration worksheet, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass. It's also where you can find the full deep dive answers to my video, the 5 questions you must ask before making a Golden Visa investment. Remember, the only bad question is the one you don't ask. You don't need to be an expert, you need a system. The quality of your life moving forward may hinge on the quality of your diligence before you sign a subscription agreement and send your savings abroad. I'm here to help. Don't get burned.